With gold's price hovering near all-time highs, it's really tough to forget about the price, but I'm going to ask you to do that in this video, and there's a very good reason for it. I'll explain as we explore. That's right, the gold price is wrong. That's the headline of the piece I'm going to be referring here to from Marin Katusa. And this is quite a fascinating piece that mirrors what I've been talking about with silver for quite some time. In fact, I have a playlist on it. Before we get in too deep with that, I want to remind you, channel sponsor Summit Metals, they have these cool wallets now made of metal. That's right, that's metal. And you can get them and fill them up with your preferred size. They now have the 10 slot for the 10th ounce gold eagle now. And it's a pretty cool way to be able to accumulate and pack a lot of value in a small package that you can literally fit in your wallet or your purse or pocketbook or pocket. And nonetheless, there you go. Check it out. Experience their great customer service by clicking on the link right below here in the description. So this is fascinating, seeing gold reach all-time highs and why you should not really just wipe it out of your mind about the price of gold. Because in May of 1999, the Bank of England announced it would sell 415 tons of Britain's gold reserves. It looks like the chancellor at the time, Gordon Brown, he forgot about gold's price because it was hovering around $282 an ounce. He called it a restructuring to more productive assets. That's known as Brown's bottom. And they sold at the absolute bottom of the price. Today, that gold would be worth over $48 billion. They received $3.5 billion from the gold sales in 1999. The British press still calls it the Brown's bottom, the worst trade in central banking history. Indeed it was. Now, today, central banks are doing exactly the opposite. China, Poland, India, they're buying record amounts at over $3,600 an ounce. And that was the last kind of numbers we saw. Of course, it's gone up even since then. Either they're making the worst trade since Gordon Brown, or they know something the market doesn't. And they know that the gold price really is wrong. And I agree with that. And this is why I continue to buy gold as well, too. Not nearly as much as I did before, considering the spot price. But one way you can buy is not only 10th ounce size, but the gram size bars. You've shown me those. But there's other options now, too. And my friends over at Germania Mint, they know all too well. They have released their ounce-oriented gold-minted bars. In other words, these are very, very tiny bars, excellently crafted. This is their smallest version. This is the 1/200th of an ounce. Now, you've seen some of these from Scottsdale as well, too, but these are absolutely exceptional quality for sure for Germania. Showing Lady Germania here on the obverse of the piece in a pure gold, and it comes in these nice plastic small little assay cards so that you don't lose them. 4 nines fine gold, 1/200th of an ounce. Beautiful, showing Lady Britannia with her flowing hair. Beautifully crafted for sure. And it's a 4 nines minted bar with an unlimited mintage. This is a bullion piece. And they're not available yet, but they will be soon. In such great craftsmanship here, you can see the excellent work and the dyes that they use to produce these. It looks like they're silver coins. Remarkable textures and everything. Look at that, Germania Mint. And it has the all the information here that you need to make it a certified actual gold bar from the Germania Mint. They've done a great job with their products for sure. They wanted me to show this to you so that next time you're out looking around when they do become available, this may be a very affordable option down the road. But nonetheless, we have to keep in mind price. We can't ignore it when we buy it and when we sell it. But in reality, if you take a look through the grand scheme of things, the central banks know something we don't, which is why I encourage us to know it and to be our own central bank. Gold isn't tired, and it might not be peaking yet. Even at $3,800 plus, the headlines say all-time highs. But if you look at the bigger picture, investors are looking at the wrong number, and central banks might see something entirely different. Gold is still cheap when you adjust for the money supply, and the setup for much higher prices is staring us right in the face. Since March of 2020, the Federal Reserve created $6 trillion in new money. That's right. That's a 40% increase in M2 money supply and more dollars created in 4 years than in the previous decade combined. Yet gold, the asset that's supposed to protect against currency debasement, hasn't even kept pace with that. It should have, but it hasn't. And the gap between the gold cost and what it should cost is $800 per ounce. So gold is actually cheap relative to the gold currency fiat money supply. Despite hitting nominal all-time highs, gold is actually cheaper relative to money supply than during previous peaks. So essentially, it harkens back to the ratio. That's right, the ratio. And we talked about that with silver, but now with gold, we're highlighting here in this video the number of these printed year over year compared to the amount of gold mined year over year. And that gives you an example of what's going on here. These are being diluted, devalued. You cannot print gold, that's for sure. So that's pretty wild. And so despite hitting nominal all-time highs, and even when adjusted for inflation, gold is actually cheaper than relative peaks. At $3,600, everybody knows that gold is at nominal all-time highs, but relative to M2 money supply, it is well below historic peaks. And even at $3,800, it is, when adjusted for inflation, it is actually far surpassing inflation. But that it tells us an even bigger story. It suggests significant upside potential when the market catches up to monetary expansion. If gold matches its 2011 money supply ratio, you'd be looking at about $4,400 an ounce for this metal right here. If gold matches the 1980s ratio, it's about $9,700 per ounce. The divergence is massive. Gold has been playing catch-up since 2020 when money printing went vertical, but it still hasn't closed the gap. And central banks know this. They're buying it at record levels. The general public is still looking at nominal prices and missing the real story that investors are starting to pick up. And if you look at how big money is positioned since early 2024, managed money long contracts have absolutely crushed the short market. And that is pretty amazing to see. The pros are leaning hard into gold. Hedge funds, traders, money managers are not fading this rally. They're piling in and think this will continue with good reason. Rates are bending lower, deficits are ballooning, tariffs are flying, and the geopolitical issues continue to be a tinderbox. Smart money knows this. Forget about what you know about gold miners from the last decade. At $3,800 gold, the average North American producer generates $2,200 per ounce in margin, assuming the $1,400 in all sustaining cost. So that's pretty amazing. And so that's a 50% jump in profits or just a 26% rise in gold, operational leverage at its finest. And this time the miners are better positioned than in past cycles. Balance sheets are stronger, debt is lower, and discipline is higher. The free cash flow pouring in now is funding dividends, buybacks, and growth without the reckless dilution of old. And so we see that $3,800 really is not expensive. It's mispriced. Central banks aren't waiting for confirmation, and nowhere is there more evident than China adding 225 tons in 2024 and continuing strong in 2025. The $6 trillion in money supply created hasn't disappeared anywhere. It's sloshing around the system looking for scarcity. There's nothing scarcer than an asset that hasn't been printed since the Big Bang. Gordon Brown sold at $282 thinking gold was dead money. Today's central banks are buying at $3,800 and $3,800 knowing it's cheap relative to the currency they're creating. And so we're going to see how it's playing out. It already is starting to play out. Adjusted for its all-time highs, gold is there. It's already up. And we're going to continue to see it climb. That's why I'm still bullish on gold, even though it wasn't that long ago when I was hesitant, thinking we were near the top. I don't think so now. So when you put it into perspective like that, and understanding the reality of the situation, that gold is not going to be priced based off of any ratio, but it gives you a whole new perspective and understanding that metric alone means that gold is undervalued. And if gold is undervalued, that means silver is also undervalued greatly during these times. So that I hope will give you a little bit of encouragement that you're doing the right thing by holding gold, even if it's very, very tiny pieces of gold like what you see here, or the gram bars, or even a bar this small. I think it's all works very well in our favor that we've got ourselves some real sound money that only preserves its wealth and its value over time. And because we know the dollar isn't, that's for sure. Let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. We'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.